it's Ryan Gillard here at Real Broker, and today I'll take you through our monthly market stats and let you know what happened for the month of August. And today is September the 3rd, and the stats were literally just released maybe 10 minutes ago. And the headline, Calgary housing market sees shifts. So this is a good little blurb right here. So the housing market, it continues to move away from the extreme seller's market conditions we've had the past couple of years, I would say. So easing sales combined with gains in supply, pushing the months of supply above 2 months in August. This is the first time I've seen it above 2 months since I started doing these videos, probably in like 2 years. So the market is changing. So as expected, rising new home construction and gains in new listings are starting to support a better supplied housing market. So the market is basically just balancing out, which tends to happen when the market is red hot like it has been. People catch on. So you see a lot of new builds. There's brand new neighborhoods under construction in Calgary on all 4 quadrants of the city. You have lots of projects, infills going up in the inner city, a lot of activity. And once those products become available, it adds to the supply and helps balance the market, which I think is happening right now. Kreb thinks this trend should continue throughout the remainder of the year. And you add that in with the high interest rates and stuff like that, it makes sense that the market should be balancing out. And I'll just go over the highlights here. So sales, 2,186, down 19.5%. Now that sounds like very bad, but if you were to look at this before COVID, this number will be closer to like 1,500, 1,600 sales. So although we're down 20% over last year, we're still well above long-term averages. So the market is still good. It's just, it is balancing out. New listings are up. This trend has gone up the last few months. So we're up 13% year over year to 3,536 active listings. So the active inventory, 4,487, up 37% year over year. So the trend is less sales, more inventory is what leads up to a balanced market. So we are transitioning by the looks of it to me. And months of supply, I already touched on this earlier, up 70% year over year. My goodness, that's a huge increase. Now that's an alarming number, but still 2.05 months of supply is still a seller's market technically. Once this gets closer to like 3 months, then I think we're more into the balanced markets, and then a buyer's market in Calgary might be like 5 months or more. So things are still good, but this number right here, I'd be keeping an eye on it. And in terms of pricing, the total residential price, $601,800, up 6.3% year over year. So prices are still up. I imagine this might taper off if the trend continues with the lower sales and more inventory. Detached price, $762,600, up 9.5%. Duplexes, $681,200, up 9.6%. And townhouses, $461,700, up 12.5%. And for condos, $346,500, up 15.8%. And next up, I'll just take you around the city and give you a regional snapshot of Calgary pricing. And I'll start off here in the inner city, $604,500. This number is deceiving because of lots of condos in the inner city. And the detached properties and duplexes are much more expensive than this. So it is a bit deceiving. The west side of Calgary is typically, on average, the most expensive part of the city, $724,500, up 4.7% year over year. The next most expensive area would be the northwest region, $651,900, up 7.2%. And then you can kind of lump the north, the south, and the southeast. They're all kind of around the average price ranges for Calgary, and they're all hovering around $594, $593, and $578. And then the more affordable parts of Calgary would be the northeast and the east side. For the east, $443,100, up 14.4%. And the northeast, $530, up 10.8%. And here's a good little snapshot that will help you visualize what's happening right now compared to last year. So for total residential, there were 2,186 sales this past August compared to 2,700 for last year. So the sales are down. New listings, 3,500 versus 3,100. So sales down, inventory is up. The active inventory, 4,487 versus 3,200. So the inventory is up. Days on the market is up, 27 days versus 25 days. But pricing is still up. Just we've had a really good run, and it takes a while for prices to see the difference if they are balancing out or declining. So right now, I'll go with the benchmark price, $601,800. versus 566 over last year. So what does all this mean if you're a seller and your sole intention is to time the market and cash out? Well, I would say now might be a great time to do that. September, October, November can typically be very busy, and there still isn't all that much inventory, but there is still a lot of buyer demand out there. But if you are looking to time the market as a seller, if it were me, I'd probably do it right now. If you are a buyer, I think you've got better news on the horizon. Maybe the interest rates come down and there's more inventory and it's not as crazy. But this might turn around come like the spring market. You never know. It's against the stock market. But as of right now, things look to me like they are balancing out. So it might be a bit easier for a buyer. And as a seller, things are still good. But if you're looking to cash out, now would be a great time, I would say. All right, that's it for my quick little rundown on what's happening with our market. Any questions at all, give me a call, shoot me a text, send an email. I'd love to help you out, and I'll see you on the next video.